The best mortgage is no mortgage at all. That means you've paid off everything. However, there are a lot of people out there, myself included, that have a mortgage, and that is likely to be the biggest bill that you have every month. A lot of the advice out there for paying off your mortgage early recommends refinancing your mortgage from a higher interest rate to a lower interest rate. However, in the current rate environment, if you just took out a mortgage within the last year or so, that's going to be really difficult to do. So while you may have been able to cut down your monthly mortgage payment by refinancing prior to the last year or so, that's not going to be the case now. You're actually going to see your monthly payment go up if you refinance. There is another option, however, to cut your monthly mortgage payment without refinancing, and that is the mortgage recast. So what does recasting your mortgage involve? To make a long story short, you just basically need to prepay a large chunk of your mortgage. That can be in a lump sum or it can be over a period of years. So, Chase Bank has a page that tells you how recasting a mortgage works. And under the scenario they have a 30-year, $200,000 mortgage at a 4% interest rate. Good luck with that at the end of 2023, but for several years, that was a fairly standard mortgage interest rate. Anyway, under this scenario, the required monthly principal and interest payment would be $954 per month. Now, let's say for interest that over the first 15 years of the loan, you paid off $70,000 of the principal just because you have been paying the minimum monthly payment. In addition to that, you've paid off $15,000 extra. So anyway, instead of paying off just the $70,000 required, you've paid off $85,000. And Chase says this additional principal could come from paying more every month or from a large lump sum extra payment at the end of the 15 years. Perhaps you've gotten an inheritance, a bonus, whatever. Doesn't matter where it comes from, but you have paid off $15,000 extra over that 15-year period. So in a recast, you are on track to pay off your mortgage faster, but the monthly payment stays the same, and you would pay it off in year 28 under that scenario. But when you recast the mortgage, the bank will re-amortize so that your mortgage term, the 30 years, is still in effect, but you've effectively paid down extra. So that's going to cut down the monthly payment. So you would have been paying $954 a month. Now you're paying $848 a month with the same original 4% interest rate. You don't have to refinance and pay the thousands of dollars that requires from getting, inspections and all of that kind of stuff, closing costs, for example. So this is a way to cut your monthly mortgage payment. So what if you just got your mortgage within the last year or so and you've made a lot of extra payments, or you have a chunk of money to put at it and you really can't refinance without getting a worse rate? Can you recast now? I want to show you what that might look like. So I found this recast calculator at myhecm.com, and I don't know what they're all about, but they are into the mortgage business. And I looked at how much you would have paid on a $200,000 loan within the first year, and you would pay off a little over $2,000, close to $3,000 in that period of time. And let's say you got your loan in December of last year, borrowed $200,000, and then you also were able to get a 6% interest rate, which makes your payments $1,191 a month. So anyway, the interest rate is 6%. Your current principal and interest payments would be $11.99, I think it is. This was as close as I could get without it going over or lower. So you would have 29 years left on the mortgage, and you will put a $10,000 lump sum toward the mortgage. The lender recast fee is set at $250. Most lenders will charge anywhere from $200 to $500, although your mileage may vary in that regard. So take that into account. So if we hit the calculate button here, what we're going to come up with is a new monthly payment. So keep in mind your previous monthly payment was $1,194 in that parameter, and now your new principal and interest payment is going to be $1,137. So you're going to save $57 a month on your required payment. There are some limitations on who can actually recast and re-amortize their loans. And if we look at this Rocket Mortgage page, you can find out how to qualify for mortgage recasting. Number one, you cannot have a governmental backed loan. So anything with the FHA or the VA or the USDA, you can't recast your mortgage. You have to meet the minimum principal reduction standards for Rocket Mortgage, and for Chase, apparently that is $10,000, either in a lump sum or paid over a period of years. Some banks will require less, like $5,000. Others will require more. If you have one of those two banks that I've mentioned, $10,000, you just need to check with your bank. You must meet equity requirements, so you're probably not going to be able to be underwater on the mortgage, owing more than it's worth. So you need to be able to keep that in mind. And also, you need to meet your lender's payment history requirements. So you can't be regularly late on your mortgage. So what are the benefits of recasting your mortgage? I can think of two. Number one, you can avoid having to pay as much every month. Your monthly mortgage payment will go down. Number two, you can do that without having to pay hefty fees for refinancing, closing costs, inspections, and all that. The biggest downside of a mortgage recast is the fact that the term of your loan is still going to be 15 years or 30 years. And that means that you're going to be in debt longer. That means you're going to pay more in interest costs because the term of the loan is longer. The good news is that you can cut down on your monthly mortgage payment without refinancing in this really high rate environment. Now, that doesn't mean that you can't pay more in the future. You've already been paying more, but your monthly mortgage payment will be lower and you will have that additional flexibility in your monthly budget. If you keep paying what you've been paying, and keep in mind, if you're able to recast, you've been paying even more so that you've gotten ahead, you will actually still be able to pay off the loan early, but your monthly required payment is going to be lower, which helps your monthly cash flow, and it alleviates some of the risk that comes with having a very large percentage of your monthly budget going to the mortgage. So anyway, I hope you found this information useful. If so, if you would be so kind as to help us with the YouTube algorithm by giving us a thumbs up. Also, if you've not already done so, be sure to subscribe to the channel. I talk about all sorts of personal finance topics, mortgages, obviously, travel hacking with credit cards, and also occasionally stocks. It's not to be construed as personal financial advice from me. Rather, it is what I'm thinking at a given time. It's for educational purposes only. But anyway, subscribe, like, hit the notification bell to be informed when the next video comes online, and also share with your friends if you think they might benefit from this information. So anyway, I want to thank you so much for watching, and until next time, have a great day.